Welcome back. I'm Pratap here. Today is the 29th November 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. Please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday, end of the day report, we identified 1, 2, 3, 4, 5 plus Nifty also identified. So total 6 high liquidity daily and 75-minute zones are identified. And we got 3 very good trades from these stocks. The first one is Tech Mahindra. This is the 75 minutes high liquidity demand zone rally, base rally. We have 2 base candles. This is what our software identified. Stocks near the 75 minutes high liquidity demand zone. And this zone we should fine tune with 15 and then again 5 minutes. See, I came to know some of you are struggling with fine-tuning the zones. See, according to me, many of the zones easily you can identify. Sometimes you get confusion when there are multiple order flows in a zone. In one of the stocks I will explain because that is having multiple order flows. When multiple order flows are there, sometimes you might be having confusion which one we can take, which one we can omit. Generally we accept multiple order flows as it is. But there are some LOTL zones might be there. At the time you need to take a clever decision. That I will explain in the next stock. Because many times I look for the origin. I ignore the rest of the LOTL zones. Because origin is having a strong institutional order flow. What is that origin? I will explain. Because I came to know some of you are struggling while fine tuning the zones. Maybe you are struggling, you didn't practice good enough, that is one thing. Second thing, you are struggling because every day you are listening my HLQ zone analysis videos and parallelly you are not practicing. What is parallelly not practicing? See, I shown you rally, 2 base candles rally. This is the zone identified by our software. You pause the video. If you are a learner, you might not have subscribed to the premium videos. In that case, what you have to do, pause the video and draw the zone in your chart, fine tune the zone and then compare your analysis with my analysis. Did you draw the zone exactly the same way how I have drawn? Because some of our members are drawing the zones exactly the way how I am drawing. Maybe sometimes few mistakes might be there when there are so many order flows in a zone. Sometimes even I make mistake. I have to accept that point. Nobody is perfect. But I do rarely, my mistakes are very rare. Initial stage, maybe you make multiple mistakes, you have to accept that. Once you make mistake, then only you will be having learning. What is experience? Experience means we make mistakes. You learn from the mistakes. Later on you will understand how to avoid such kind of mistakes in our future analysis. Nobody will perfect on the day one itself. Please understand. You get perfection once our experience grows. You should not expect exactly the way how I am drawing. You should also draw from the day one. That is not possible. Initially you make some mistakes. Sometimes it is very easy to analyze the zone. Sometimes while fine tuning you may get a little confusion. Initially you avoid aggressive trade setups. You have to avoid initially. Even if you miss the trades, aggressive trades, no problem. First you should get perfection on fine tuning the zones. Once you become expert or you get good confidence, then you can look for aggressive trade setup. This is the systematic way you have to learn. This is one of the reasons why, because I don't want to make you get confusion. Recent times, if you might have observed, many aggressive trade setups I am avoiding, because I don't want you people take you into that area. Earlier I thought you people are learning, but I did not realize some of you are getting confusion. First I should make you get confusion in fine tuning the zone. What is fine tuning? You already learned in lesson 16. Inside 75 you have a 15-minute zone. Inside that 15 you have a 5-minute zone. That is the institutional order flow. That is what you learned. Sometimes this fine tuning is very easy. This is an example. It is very easy. It is very straightforward. No confusion in this zone. If you go to 15 minutes, you will find only one 15-minute zone, which is very clear. Go to the 15 minutes time frame. Now we are in the 15 minutes time frame. See, it's very simple now. You have a rally candle as a leg-in. You have one base candle. You have again a rally candle. So it's very easy. Rally, base, rally. So you won't be having any confusion. Very clear. Sometimes you will find such kind of zones. Now again inside this 15-minute zone, you need to fine tune with 5 minutes time frame. Now change the time frame to 5 minutes. Now we are in the 5 minutes chart. See, inside that 15 minutes chart, we have a rally, 1, 2, 3, 4, 5 base candles, and again a rally candle. Why rally candle? You add the body, hidden body, rallying, rallying, rallying. You got a very big body, and it's a huge candle. It looks like a failed ERC candle. But if you think from dynamic point of view, this is a rally candle. Because prices are closed far away from the zone. If it is this closing price is very near to this zone, you would not have considered this zone. Even though it is a very big ERC candle, you won't consider. But if you add the dynamic, this is going to be a huge body, rallying, 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 and finally closed here. After that, follow through candles, big move. So there is no confusion at all here. Straightforward, you have drawn rally, base, rally. See, today prices exactly came to this zone, picked up the orders, you got a very clean trade. Prices went inside the zone. Of course, definitely we will keep some entry buffer. Some of you don't take entry buffers and you want to take trade inside the zone. Sometimes if you don't add entry buffer, what will happen? You will be missing the trades. Sometimes if you add the entry buffer, maybe risk might be more. At the time you don't add. See, these are the simple things you have to observe. But anyway, we got a trade, and after that, couple of times, the prices again entered, and finally, the prices were started moving, and finally it reached the 15 minutes target. When you got the entry, this is not exactly 9:15 candle. If you go to 1 minute, it is 9:16 or 9:17, you got the trade. See, this is 9:15, price is closed. This is 9:16. Price has stayed inside the zone for a lot of time. Even 9:17 candle, sometime it was here, opened here, and finally started moving up. Again came to the zone, again picked up, and again. Probably you took your trade here, not here. But you will be holding. Of course, there is a possibility it will be violated. If it is violated, it will hit our stop loss. We can't do anything. Sometimes this up and downs will take place. And finally, prices were started moving and finally reached. And one more reason you should observe, here drop base rally is created here, the 1 minute zone. Generally it happens, if this zone is having high liquidity capabilities, institutions again add new order flows in this area. But anyway, that doesn't matter now. Finally we got the trade and reached the 15 minutes target. But another problem, many people won't be having patience to wait up to this 15 minutes target. If prices were moving in a range for a period, mostly we will exit. We will exit with a fear of losing the money. Okay, initial stage you will be having such kind of fear. Once your experience grows, you will understand when to hold, when to exit. Or sometimes when it after reaching 1:3 RR, probably you will use 1 minute or 5 minutes trailing stop losses, and continuously you will try to get the maximum profit until it reaches the target. If it reaches the target, there you will exit. Still, if you feel prices are sharply moving, there also you will keep trailing stop near to the zone, either 5 minutes or 1 minute. If this zone is violated, you will get more profits. That way also people will do. See, these are the different techniques for getting better profits. It's not that exactly you exit at the 15-minute zone. It's all depending on your psychology. Your psychology plays the role. Where to exit your trade. Whether to wait until the 15 minutes target zone, or you need to exit a little before, or you are happy with some certain profit after getting the entry. Maybe some people, they might have exited here. They might be happy by the time whatever the profit it has given. Maybe around 7,000 or 8,000 rupees profit you might have got at this level for one future slot. You may feel that is a very big money for the intraday one trading point of view. Your mind might be telling you, okay, book the profit, book the profit. You already got good profit. Maybe tomorrow's trade, let us take more profit. That way my mind might be sometimes forcing you. All these emotions we need to control. How to control? By using trailing stop concepts you learn. Okay, anyway, these are the 2 points you should take care. One is fine-tuning the zone properly. Second thing is, after taking the trade, how better you are holding the trade to book better profits. These are the 2 important things. You won't get perfection on the day one. Take some time. Maybe you are a first-time trader, you learned recently, maybe last 3 months back or 5 months, 6 months back. Even 1 year back also you learned, still you are a fresher. Don't think you are an experienced person. If you are in the market for 3 years or 4 years, at least that should be considered as minimum experience. Until that time, you should consider yourself as a fresher. You should be very disciplined. Once you get the profits, you should learn how to hold them to get the better profits. You should learn from where you should start looking for exit the trade. These kind of things you will learn. So anyway, this stock reached the 15 minutes target at 10:45 candle. Morning around 9:15 candle, 9:16 or 9:17 you got the trade. So within 1.5 hours, You might have holded the trade for 1.5 hour. If you would have holded the trade for 1.5 hour, by reaching this 15 minutes target zone, you would have got 15,330 rupees profit as per one futures margin cost. And this is 8.4% ROI as per one lot. So 8.4% ROI as per the one lot margin cost. And also, do you remember I told you in I think in the Telegram group I mentioned this October and November month, many trades you got almost 7 to 10% ROIs you got, many stocks in between 7 to 10%. Those who traded these HLQ zones in the month of October and November, definitely you would have got very good profits. The reason is market momentum is increased. The moment momentum increases, you get more profits, better ROIs you get. See, during the elections period, momentum is very low. Most of your profits are around 5% ROI. Reaching 6% was very great at that time. But now all of a sudden, the statistics are changed. Okay, this is about Tech Mahindra. It is a very clean trade, fine-tuned 5-minute zone you got. But only thing you have to observe, prices reached deep inside near to the digital line. I think probably some 10 paisa it is came out of this zone. Of course, you are within the stop buffer, I agree. But almost this order flow might have been consumed. Maybe next time this zone will be violated. So this is about Tech Mahindra. Next one is ACC. ACC is having multiple order flows. You should analyze this stock very carefully. This is also a 75 minutes high liquidity zone. It's a rally, base rally. This is how our software identified this zone. This is fine-tuned with 15 minutes time frame. And ACC, already I fine-tuned this zone. I already explained this. This is not a fine-tuned. I didn't fine-tune yesterday. Yesterday when I opened this chart, this chart is already fine-tuned. I already explained you in the earlier sessions. Probably when I would have explained you, let me go to the daily. I think yesterday only we might have discussed about ACC. Yesterday we discussed, I explained how I fine-tuned. The same fine-tuned zones. Yesterday I explained this. Drop base rally and rally base. Rally to base candle medium is part of the base and rally. This is what I explained you yesterday. Those who listened my video today, you might have got this trade. Exactly the way how I fine-tuned. But of course, you need to add small entry buffer. Next 5 minutes time frame, you have this rally, base rally. This is what I fine-tuned yesterday. But type 1 entry you got. If you would have looked for type 2 entry, you might have missed the trade. The reason is the type 2 entry, the risk is very small. First of all, type 1 entry itself risk is very small. This is within your accepted limit. And this is also I explained. Rally to base candles and rally. Yesterday I have explained this. And today, the first fine-tuned zone, it gave you the entry today. See, in this candle it gave you. What is the high of this zone? 2181. What is the low of this candle today? 2181 60 paisa. Maybe if you would have added another 70 paisa or 80 paisa or 1 rupee entry buffer, your trade would have been executed today. Generally, we add entry buffers because we don't look for exactly at this proximal line. Because many people keep order flows a little above the proximal, sometimes you will be missing. That's why mostly we keep entry buffer and our trades will be executed. That way this trade also would have been executed today. After that it reached the target. What is the target? The 15 minutes zone. This rally base drop. Prices went, picked up the orders and again came down. Okay, some of you may try to draw the zones like rally, base, drop, but all these are all medium sized candles. All these candles are medium, leg out point. This is a perfect zone, 15-minute zone, rally, base, drop, and reached the target. But I am sure the practical scenario is not exiting, because here I look for two things. One is practicality point of view. Second one, our high liquidity zones achievements point of view. Both are important for me. Achievement means has it reached this actual 15 minutes target zone. If it does not reach, what could be the reasons? Who might have prevented? Is it having minimum 1:3 RR achieved? Then it is a successful trade. That is a HLQ zone performance point of view, but our practical trades, where you really exit the trade. I am sure many of you might have exited here. Let me draw a horizontal line. Maybe somewhere in this blue color line you might have exited, you might have booked your profit. You might not have waited until this candle. Why at this blue color line? Their prices are going and again coming down, going and coming down. Somebody is preventing. There could be a high liquidity zone here in this area. Which time frame? Maybe 5 minutes or 1 minute time frame. Go to the 5 minutes. We don't have a proper zone. We are having rally, base, drop is there. But this is looking like a big candle, ERC candle. So better thing is go to 1 minute, you get better clarity here. See at this blue color line, you have a 1 minute zone. Rally, base, drop. This is the one acting as a high liquidity zone. Draw this zone. The supply zone. This is the 1 minute supply zone. See, this is the first test, this is the second test, this is the third test, this is the fourth test, this is the fifth test, and the sixth test. Now this 1 minute zone is violated. But do you wait? Do you have patience to wait until this point? What is the guarantee that at this level this will be violated? Until it is violated, you may not be knowing. Maybe from here again it might have come down. And moreover, it is an intraday trade. I am sure definitely the third test or fourth test you might have booked your profit, because it is not letting the prices to get into this 15 minutes target zone. Moreover, it is eating your time. If you would have exited, maybe you might have invested that money in some other stock. And that too, the distance between this 15-minute zone and 1 minute zone, high liquidity zone, is very, very small. Just because of this small amount, I am sure you won't feel like wait until prices reach here, until this 1 minute zone is violated. Moreover, we don't know this 1 minute zone will be violated today or not. Okay, it is violated. Because it is violated, we are believing it reached the 15 minutes target. Okay, software performance point of view, it is okay. But what about our practical trade psychology point of view? Practical trade psychology point of view, definitely You will wait for 1 or 2 tests, probably the third or fourth test, you book the profit and you will exit. Because you strongly believe by this time, by the third test or fourth test, you believe this is a high liquidity zone. This is strongly holding. It is pushing the prices and again coming, pushing the prices. Or maybe some of you, after waiting 1 or 2 times, you may implement trailing stop loss, somewhere you will exit. Or maybe exactly at this 1 minute level you will exit. Different strategies you will implement. Initially you may not be knowing this is a high liquidity zone. Generally what happens? The 1 minute zone will test, it will go down, and next time it will be violated. If not immediately, maybe after second test, third time it will be violated. But multiple times it is holding, definitely you should assume this could be a high liquidity zone. It is not letting your prices to get up to 15 minutes target. Probably that 1 minute area could be our revised target. This is the way you will understand. That's why somewhere here you might have exited. That is the practical scenario. Then your profit is from here to till this 15. Okay, but what is my interest? My interest is how my software is performing. Has it reached its target? If it reached the target, L, it has given profit up to 15. Suppose if it does not reach the target, today this 1 minute zone is not violated, let us assume. Then we will consider our final target is up to here. This is the performance of high liquidity zone. That is what I am going to consider. So that's why I understand the difference between HLQ zone performance and your practical scenarios. When I am saying this finally reached 15 minutes target, it doesn't mean that I am asking you wait until prices reaches the 15 minutes target. No, I never tell that. Always my advice is, if the prices are, if some lower time frame zones are preventing the prices to move up, you need to exit your trade at that level. Maybe that could be high liquidity zone. That day it may not be letting the prices go into that 15 minutes target zone easily. Sometimes it may not let you get into that during the intraday. Sometimes mostly after taking a lot of time, multiple tests, waste your time, and then finally the zone will violate and reach your target. Like this stock happened today. See, when first time it reached 945, it reached. But you have, initially you don't bother about this 1 minute, because many of these 1 minute zones will violate. See, all these 1 minute zones are violated here. This is one 1 minute zone, this is another 1 minute, this is another 1 minute. All these are all violated. Like that, this also will be violated. That is how you will be assuming. And then it will reach your target. But this is preventing the stock. That you will realize at least after testing, at least 3 times it is tested. Maybe third time you will exit, or fourth time you will exit. Immediately your mind should sense something is happening here. Hope you understand. So that's why this 1 minute is the practical scenario. But performance point of view, or high liquidity performance point of view, yes, it achieved. Finally, prices reached this 15 minutes. But when it reached at 2 o'clock. The 2 o'clock 5 minutes candle. But here, maybe you might have exited at 10 o'clock 55 minutes candle. Say 11 o'clock. That means 3 hours. If you should be ideal to get into this area. But those 3 hours, you might have got some other trade in some other stock. Maybe you might have got another good profit in that stock. Hope you understand. This is how you have to understand the difference between theory and practicals. This is theory. Has it reached this 15 minutes target? Yes, it is theory. But is it practical? No. Practical, you will exit somewhere here. probably in this candle you might have exited. Okay, but otherwise SEC has given again a very good profit. How much profit SEC has given? 12,420 rupees profit as per one future. And as per one future's margin cost, you would have got 8.9% ROI. Of course, I calculated up to 15 minutes target zone to check the performance. This is not my trades, always remember. Several times I told these points. All these are all performance of the high liquidity zones, not about my trades. Okay, this is about ACC. There is one more trade we got, that is NTPC. This is a daily high liquidity demand zone. Let's go to the daily time frame. This is the drop, 1, 2, 3, 4, 5 base candles and a rally candle. This is what our software identified, NTPC. If you look into 75-minute zone, there was no proper 75-minute structure. Generally, this zone has to be violated. But it didn't violate because in the recent price action, when prices entered, when this is yesterday, sorry, not yesterday, that is Thursday, 21st November, last week. Prices entered into inside the zone. At the time, a new 75-minute zone is created. Where is that new 75-minute zone? This is the one. This is a rally candle, failed ERC candle, but as a rally leg-in, you have a base candle, and then again you have a rally candle and follow-through candles. This is the 75-minute zone. And this 75-minute zone is again fine-tuned with 15 minutes time frame. So here you have a 15 minutes zone. This failed ERC candle as a drop, you have a base, you have a rally and follow-through candles. This is the 15-minute zone. Not only that, before this 75-minute zone, there is another 15-minute zone rally, one base candle and another medium size leg candle, part of the base, and then you have a rally candle. This is the 15-minute zone as an horizon to this 75 minutes fine-tuned zone. You can also consider this is the fine-tuned zone only because it is fine-tuned at the distal line. But a part came outside the zone. Because a part came outside the zone, we are considering this as an horizon to this 75-minute zone. Because earlier, the 75-minute zone is created. Institutions, cleverly what they are doing, they added a lot of order flow in this zone. And then by taking the order flows from this zone, again a 75-minute zone is created. So that's why we are calling this as an horizon. But because this is a 15, there should be a fine-tuned 5-minute zone should be there. That should be the real horizon. That is the area strong order flow will be there. That we will see. So you have two fine-tuned zones. We have a drop, failed ERC candle, base rally. And here you have a rally, two base candles and a rally candle. This is a high explosive candle. Okay, next 5 minutes time frame, we are fine tuning. Here you have a fine tuned 5-minute zone. So this is the candle, leg candle, rally candle. You have a base candle and again a rally candle. The 5-minute zone. And here you have a drop base rally. This is the horizon. This drop base rally is the horizon for this entire 75-minute zone. From this fine-tuned 5-minute zone, it picked up the order. This fine-tuned 5-minute zone is the horizon for this 75-minute zone. It picked up the orders and then a 75 minutes zone was created here. That's why we should not miss such kind of order flows, this drop based rally. But to get into this area, first this order flow has to be violated. This rally base rally. This is a fine-tuned 5-minute zone. This fine-tuned 5-minute zone inside 75-minute zone. This is again inside 75. See, 5 minutes inside 15. 15 inside this 75. See, generally the overlap will take place exactly in the middle of this zone, or maybe at the proximal line, maybe at the distal line. Anywhere it will happen. The distal line overlap, if it is coming out of the zone, at least, and if the zone is created well before your higher time frame zone creation, we call it as a lower time frame zone, as an horizon to the higher time frame zone. Such kind of concepts you learned in lesson 22. But today what happened? Prices entered into this fine-tuned 5-minute zone. Of course, you need to add small entry buffer. And moreover, this zone is maybe like a high liquidity zone. This rally base rally. Why it is a high? It could be a high liquidity zone because prices came near to the zone and moved up. And again prices came into the zone. It looks like prices went deep inside and moved up. Actually, it's not that. Here a rally base rally is created again. Rally base rally, LOTL zone. When LOTL zones are created, it will give you another new trade opportunity from this horizon. See, prices came almost close to the zone. Maybe small entry buffer you should add here. Until this 15 minutes target zone, it has given 1:5 RR. Okay, why I fine-tuned this zone with 5 minutes inside 15? Because 15 minute structure is not really great. Go to the 15 minutes time frame. See, here you have a 15-minute zone. I consider this is also, see, looking like a base candle, but I consider this is a lagging. Sometimes we compromise and draw the zones. And all these base candles, again medium size candle, part of the base and drop. Somehow I am not comfortable with this structure, 15-minute structure. That's why again I looked into the 5 minutes time frame in that area. Now we have a rally base drop, and this is a perfect zone. Already previously the zone was tested, and today also maybe it is working like a high liquidity, and today it reached the target. See, here we got the entry. And then prices were started moving up and reached the target. And when we got the entry, 10 o'clock, 10 minutes, 5 minutes candle we got the entry, and when it reached the target, 10 o'clock, 40 minutes. That means exactly in half an hour, 30 minutes, our trade is completed. And what is the profit NTPC has given? NTPC has given 6,525 rupees profit, which is 6.2% ROI. See, all these ROIs, they are above our average intraday ROI, 6%. And many of these ROIs are beyond this month. They gave you very good profits. So this is about NTPC. These are the 3 trades we got today. And next, which one we didn't get? Nifty, we didn't get the trade. Nifty was near the daily high liquidity demand zone. This was the daily high liquidity demand zone suggested by our software. I think maybe it suggested a drop, 1, 2, 3, 4 base candles and a rally candle. So this is the high liquidity zone. Daily demand zone. This I want to fine tune with 75 minutes time frame. Here we have a drop, 4 base candles and a rally candle, and again rally base rally. Somehow I was a little discomfort about the structure. Still I compromised and draw because this candle looks like a medium size leg candle, but this is a big candle. So I need to keep this entire thing is part of the zone. But why I have drawn like this is the actual movement started from this candle. So probably order flow is within this area. You have another rally base pro gap rally is there, but this is outside the zone. But actually it is working because of pro gap, but our concentration is inside the high liquidity zone. Okay, again I want to fine tune with 15 minutes time frame. So here I found a 15-minute zone. See, this is a failed ERC candle as a leg-in. So this is like a rally candle at dynamic view. And we have 1, 2, 3, 4 base candles and then a rally candle. All these are all medium candles. So I added part of the base. But here, have you seen any structure here? No. This 75 minutes will be easily violated. But if you observe carefully, institutions cleverly placed a lower time frame zone as an horizon. There is a 15-minute zone. This 15-minute zone is overlapped with 75 minutes fine-tuned zone. Of course, the daily zone also. See here, you have a drop, you have a base, and then you have a rally candle with the pro gap. Drop, base, rally with pro gap. And hidden body you will be adding. It's a rally candle. So that's why institutions cleverly added a huge order flow in this area. Because of that huge order flow, we got this pro gap. Because there is a pro gap, see, prices came into the pro gap and moved up. They came. See, previous close was here and here also. Let me draw a horizontal line to bring you some clarity. See, next time also the same area. That means in this area there is a very strong order flow might be added. Here, this blue color line you have to see. For this one I deleted. For target we set earlier. This is the blue color line. And now prices entered into this pro gap area. Again it picked up the orders from this 15 minutes and sharply it moved up. So here you have a strong institutional order flow. Let me delete this blue color line. Now they took the trades from this zone and entire daily 75 minutes. So this is the area you have to plan your trades. But this is a 15-minute zone. We should have again a fine-tuned 5-minute zone. That is the real order flow. Look into this. Here you have a fine-tuned 5-minute zone. Rally, base, rally. This rally is a medium-sized candle base. Because some of you may draw rally, base, rally. You may ask a question, why I didn't draw the zone here? Because I am not really convincing about this rally candle. Because I am comparing with the next candle and the previous candle. This is a rally candle, base rally. Okay, you may say, again, why you didn't draw rally, base, rally here? We can draw a zone like this. It looks like. Rally, base, rally, it looks like this, right? But why I didn't consider is, this is a tiny candle. These are all the medium size candles. All these medium size candles are base candles. This is the rally. How many base candles you have? 1, 2, 3, 4, 5, 6, 7, 8 base candles. So that's why I'm some doubtful in this price action. Maybe it may work. Prices come here and again it go up. But when you have a doubt, better leave it. Even if you miss the trade opportunity, not a problem. So I have some concern in this area. So this is the reason why I didn't focus here. And here also I have some concern about this candle. So that's why I didn't draw. And here definitely this is a leg and this is a very good. Clearly we are seeing a big rally candle. So definitely this is a fine-tuned 5-minute zone. and remaining zones luck based, because we don't want that kind of luck based by compromising and drawing the zones. Why should we compromise? Because definitely I agree, some people will convince this is a leg out, because while comparing these candles, I got it out. If this is only one candle is there, let us assume the other candles are not there, definitely I would have drawn rally base rally. But somehow, see, some doubt you get in your mind, you just ignore that. Maybe it may work, who knows, it may work. But some doubt is there in my mind, I don't want to take any choices. See, this is how I analyze the stocks. And what about you? It will take some time. Your experience, once your experience adds, sometimes some doubts you will get, at the time you won't take chances. Let us assume you have drawn a zone like this, rally base, rally this one. Next time prices came, this zone is violated. Definitely you feel, I have drawn a zone, it is violated. Of course, later on you will realize maybe this leg out is not really a valid leg out, maybe that could be the reason. That kind of learning you will get after some time. Until that time, some losses, some additional losses, if you get, you have to accept. That's why we are supply demand zone is completely based on risk management. If you are willing to accept that risk, then only you take the trade. If you feel the risk is not acceptable, you ignore the trade. Even if one or two stocks hit the stop loss, you won't lose that much money. A small money only you will lose. One trade is good enough to get a good profit. Suppose if you got see, today we got a very good trade from Mahindra. I am sure everybody would have got that trade. No confusion in drawing that zone. It's very clear and neat. I am sure all HLQ traders would have placed your orders in Mahindra. You would have got a good profit. See how much profit you got, Mahindra? 15,000. If not 15,000, at least 11,000 or 12,000 or 10,000 worst case scenario profit. There you might have booked the profit. After that, continuously 5 or 6 trades are violated, still you will be in break even only. Why? Because when you get the loss, your loss could be some 1,500 rupees or 1,200 rupees or maybe maximum 2,000 rupees. Not beyond that. If that is the case, next 6 or 7 stocks, even if it is violated, still you will be in break even. That is the power of high liquidity zones. One trade is equivalent to some 6 or 7 failure trades. But those failures are very rare in high liquidity zones. Even if there is a failure, sometimes because of our mistakes, you may get that failure. Maybe you did wrong analysis. But are you going to do wrong analysis every day? No. Sometimes when multiple order flows are there, you get confusion and you feel like to take every order flow. That is how you feel in the initial stage. Wherever zones are coming, if the leg out is a medium candle or a leg out is a large candle, you will keep on drawing the zones. Once those zones are violated, you will learn. At the time, your learning will be much accurate. Because you got a hit. When you got a hit, obviously what will happen? We will be very careful next time. That is what experience. Actually, you are not losing the money. You are gaining the experience by investing that money. Whatever the loss you got, you have to assume that is an investment to gain your experience. Experience won't come easily. You have to pay some price for that. If you want to earn more and more money in the future, today you have to accept some losses. No doubt in that. But those losses are very negligible losses, because one successful trade might be equivalent to some 6 or 7 losses, continuous losses, even if you get. So that's why don't worry about the losses. Every time if you think about the losses, you will never trade anything and you never get money. So willingness should be there to accept the loss. That is only called risk. We are calling as a risk in our supply demand zone price action. You know how much money you are going to lose. Because our concept is telling you, this is your stop loss, this is your entry, that is nothing but your loss. In case, if your analysis fail. You know, before taking the trade, you know how much money you are going to lose if the analysis fail. If it is minimal only, you will take the trade. Otherwise, you will reject that stock. Okay, that is the fine-tuned zone, and here also we have a fine-tuned 5-minute zone. The horizon. This is the horizon for the demand zone. See how cleverly institutions kept. You can consider this as a drop, base, rally, and again follow through candle with hidden body. This 5-minute zone is the horizon for your daily high liquidity zone. So what did you learn from this in Nifty? Nifty is having two horizons. One is at the supply zone and another is at the demand zone. So probably Nifty will be moving within these areas for some time until one of these zones are violated. The future direction of the Nifty depends on one of these horizons failure. Until then, prices will be moving in between only. Short-term traders will get good trade opportunities. You will take a short, hold for some times. Somewhere it will come, you will exit. And again, maybe one day again it will reach. From here again it will be moving. You take a long trade here. After few days again it will be reaching here. Like that, Nifty might be moving within this range for some time until one of these horizons are violated. So institutions cleverly placed their order flows and also they defined this range. This is the range for the Nifty. Maybe for this next 1 or 2 weeks or maybe next 1 or 2 months, we don't know. That I can't tell. But we know this will be the range until one of these horizons are violated, these 5-minute zone horizons. Until then you get trade opportunities in between. When it reaches the extremes, we can plan. Maybe extremes are like sideways trade setups. But anyway, we are trading based on high liquidity zones. We really don't bother about the trend in high liquidity zones. Okay, this is about Nifty. Next one is Wipro, which we didn't get a trade today. This is a daily high liquidity demand zone. So this is the leg-in. This is a rally candle, failed years rally, base, rally. This is how our software identified. This I fine-tuned with 75 minutes time frame. Here I identified a order flow. I assumed this is a drop, base, rally, and again drop, base, rally. Here 5 minutes level I saw a bear trap. Next 15 minutes time frame. See this inside 75 price structure, I am not happy. Why I am not happy? All these are all base 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It's a lot of consolidation. I am sure this will be violated. But here we have a order flow. I consider this as a drop, failed ERC drop and base candle and a rally candle. So within this 15 minutes zone, fine-tuned with 5 minutes time frame. Here you have a drop, base, rally, the 5 minute zone. This is a fine-tuned 5 minute zone. But anyway, today Wipro prices did not enter into this zone. But why I have drawn this, why I am assuming this is a very good bear trap. See, this is a rally base, two base candles rally. There is a pro gap is there. Definitely there could be strong order flow. And moreover, this zone is picked up the orders from this pro gap area. So next time when institutions can easily play with us, they violate this zone, stop loss will hit, they capture all our orders, and from here bulls will be trapping all the bears. Because bulls are trapping the bears, we are calling it as a bear trap. Bulls means the long orders from here. They keep on buying. When they hit the stop loss, they will be selling, and bulls will be trapping the sellers. That means short trades. That's why we are calling bear trap. This could be a possible bear trap below Wipro. But anyway, price did not enter into this zone. And the last one is a Pidilite. This is a daily high liquidity supply zone. This I already explained you yesterday, how we fine-tuned this zone. So please look into the previous video. Today also price did not enter into this zone. So this is about high liquidity zone analysis. So that's why my advice to everybody, don't hurry and don't worry. Don't be hurry and don't be worry. Be cool. Even if some of your analysis is wrong, you'll learn. See, every time by listening the videos, you won't get the experience. You have to take the trades. You should get a hit. Hit means your stop loss should hit. That way your brain works very well. Maybe initially you have some pain, I agree. After that your brain works sharply. Then that learning will be a very good learning. You won't forget it, and that kind of mistakes you won't repeat in the future. That way you will become a good trader in next few months. This is the reason why everybody should take subscription, not for taking the trades every time to get the profits. Initial stage to gain experience. If you want to take a trade, you should gain experience. For that you have to take at least some 2-3 months investment. For learning purpose you have to invest in our premium video reports, software generated reports. You should not day one itself don't expect the profits. First expect the experience. After experience slowly you get the profits. But I am sure during this process our high liquidity zone performance is very high. Even if you get some losses, the profits definitely it will make you recover whatever the losses you are getting. Definitely will be in profits only, but you won't get huge profits in the initial stage when you are making mistakes. Because success rate is high, still you will be in profits. But that duration you should invest for gaining the experience. After that slowly you get profits. See, some of our members are getting profits continuously. Almost every day they are getting. Why they are getting almost every day? Because initially they struggled 1 year back or some 7-8 months back, they struggled. They gained the knowledge. Initially they invested a small amount. They did because they want to gain experience. After that, once they gain the experience, slowly they invested more money and they are getting better profits today. They are enjoying their profits. Like that, all the new members also should plan your trades. You should not be greedy from the day one. Okay, let me take a break here. Let's all meet again in our next video. Thank you.